Good evening, everyone, and thank you for joining us for our virtual seminar, 10 Myths About Home Buying. My name is Barbara Agan, and I'm the Director of Member Engagement and Education with ABCO Federal Credit Union. Our presenters today are Patrick Wade, an account executive with Member First Mortgage, and Bonnie LaRich, a preferred realtor with RE/MAX. I will now turn the meeting over to Patrick.
Awesome, thanks, Barbara. So thank you for joining us tonight. I really enjoy working with ABCO Federal Credit Union. It's one of the best credit unions in the country, and certainly one of the best credit unions in New Jersey. A little bit about me before we get started. My name is Patrick Wade. I've been in the first mortgage industry since 2001, so 20 years. Over the course of that time, I've worked with tens of thousands of home buyers, many of those first-time home buyers. In my role, I get to see thousands of applications per month, and I get to work with a variety of credit unions across the nation. I can tell you ABCO Federal Credit Union is one of the best credit unions in the country. One of the advantages that ABCO has, it ends up being an advantage for you, the member, is their CEO and internal team takes pride in their first mortgage program, just like they do in all of their programs. And that translates to good things for the members. So some of the things we'll talk about tonight are some of the programs that are available at ABCO, and some of those offerings that others aren't able to offer to their membership or their customers that ABCO can. In my experience in the credit union world, I can tell you that you will see lower rates and lower fees compared to banks and other lenders. But that isn't a big advantage. One of the biggest advantages is that ABCO looks at you on a personal level, doesn't just look at a canned set of guidelines. And what that means is they can design lending programs for you, the individual member. I've done these presentations in the past with Bonnie. She's a fantastic realtor, referred many members to Bonnie. So I'd ask Bonnie now. Bonnie, if you could introduce yourself, tell everyone a little bit about your experience.
Sure. Hi, everyone. Thank you for joining us tonight. My name is Bonnie LaRich. I work at RE/MAX Preferred. I've been in real estate 32 years. I work 5 counties. And I've done everything in real estate you could possibly do, such as resales, new construction, property management, land development, and everything. So anything you would like to do, I can certainly help you.
Awesome, thank you, Bonnie. So the purpose of tonight's meeting presentation, we're going to talk about some of the things that come up when you start to think about buying a home. Some of the things are cliches that you may have heard from friends, family members, but I can tell you in looking at thousands of applications, some of the things that you may think about the mortgage industry simply aren't true. And so we'll be able to give you good information to show you, how to feel confident, not only in starting this process, but following all the way through from beginning to end with the goal of being, home ownership. So you'll be able to be set up to be a successful homeowner. So some of the myths we're going to talk about tonight are top 5, I would say, are the down payment myth. The idea that, when you buy a home, the only thing that you need is your down payment. Job changes. In fact, I have a neighbor 2 doors down from me that I just counseled with on a job change. He's in the process of buying another home. You can change jobs. We're going to talk about that in more detail. Gifts, grants, and other concessions to help with your down payment. That the only cost associated with home ownership is the monthly mortgage payment. I can tell you in owning homes over the past 17 years, that's simply not true. And we're going to go over strategies so that you not only do you understand an overall the overall idea of what it costs to live in a home, but to be able to put a process in place so that when other expenses come up, that you're able to meet those. We'll also take a look at some of the loan programs that are available. Most people have heard of a 30-year fixed loan. That may or may not be the best solution for you. This one's always my favorite. You don't need a real estate agent. I can tell you right now, there is not a property transaction that I would buy, and I'm in the industry, that I would approach without a real estate agent. They're simply very, very valuable and act as counselors throughout the process. And I would stress to you that using someone like Bonnie is absolutely helpful to your sanity throughout the process. I can tell you that. So we're going to talk about that a little more.
Probably save money.
And you may save money, but for me, you're going to save your mind, and that's worth even more. We're going to talk about the difference between an appraisal and an inspection. We'll also talk about getting the house that you want. I mean, you're likely going to be in there for a while, and there's different strategies in order to do that. This one's actually pretty interesting. Now is a bad time to buy. I can tell you. We'll talk about that in more depth. But the time to buy is really a personal decision, and you'll get a lot of advice from different people. But we're going to go over when the right time to buy is. So let's get into a little more detail. Many of you have probably heard this, that you need 20% down to buy a home. Bonnie, how many times have you heard that from somebody that's talked to you about real estate?
Oh, 100 at least.
Bonnie, would you care to guess, in the credit union world, what the average down payment is for a first-time home buyer? I think it's 20%.
3.5.
Yeah, it's in the credit union world, it's actually about 5%.
Right.
If you're up to go with an FHA program, 3.5 is the right number. 20%. Let's talk about kind of where that comes from. Ages ago, decades ago, in order for you to get approved for a mortgage, a home loan, credit unions, banks required that their members or customers put 20% down. So that has not been true for as long as I've been in the industry. So that's from 2001. That simply is not true. In today's world, with the way people live today, putting 20% down is an absolute rarity. But that still exists today, that people think that that's this barrier to entry for them in order to buy a home. And I can tell you, certainly within the credit union world, which I've been in for the last 9 years, and the mortgage world, which I've been in for the last 20 years, I can attest that I've seen less than 15 people actually put 20% down as first-time home buyer. It is simply something that most people do not. The majority of people, the overwhelming majority of people, do not do. So don't let that number be an impediment from you moving forward. There are a lot of programs available today that allow minimum down payment of 3% or 3.5%. Additionally, your credit union, APCO Federal Credit Union, is a very strong portfolio lender. What that means is they hold the majority of their loans, and those loans are personally designed around their membership. So that is a huge advantage, being an APCO Federal Credit Union. So that number 20% is just simply something that was true in the past, exists in thoughts today, but is certainly not applicable to today's borrowers. And the way that lenders have overcome that is they've designed programs that couple either some form of down payment with private mortgage insurance, or they're able to break the loan into separate loans so that you're able to move forward with minimum down payment of say 3 to 3.5%. Bonnie, in all your experience, how many times have you had clients put 20% down?
It is rare. It is rare. I mean, more and more people are finding out, and it's such a good thing to try to educate yourself, like they're doing tonight, to speak, hear everything and ask their questions, and finding out how many options they really do have, which is many more than just the 20%.
Exactly, and what we want to do, and we're gonna talk a little bit about tonight, is how you kind of put a plan in place as you start to think about making a mortgage application and deciding whether or not it's actually the right time for you to move forward. But rest assured, you do not need to put 20% down. Many programs allow you to put much less down, substantially less down. Myth number 2: the only cost of buying a home is the down payment. So in the mid 2000s, where this one comes from, in the mid 2000s, there were a lot of programs that allowed you to put either your closing costs into the loan, or to put down, actually put 0% down and get 100% finance. I would say since the latter part of 2008, there are realistically only two programs that allow you to put 0% down. That would be a USDA loan or a VA loan. Those two loan programs, typically the percentage breakdown would be about 5% of people actually fall into the category of being able to use a USDA loan or a VA loan. So the large majority of people are going to have to put down at least a minimum down payment of say 3 to 3.5% down. In addition to that money that you're going to need for the down payment, you're going to have some closing costs, and you're going to likely have to set up an escrow account. Escrow account is an account that pays your taxes and insurance monthly, though those bills are typically only due once or twice a year. So you'll need to initially fund that escrow account, because when you first buy a house, it's at 0. So you're going to need to initially fund that account. So when that tax bill comes due and when the insurance bill comes due, if there's enough proceeds in that account to pay those bills on time. So not only do you need a down payment, which is going to be a percentage of the sales price. Again, minimum down payment would be somewhere between 3 and 3.5%. You're going to need likely around 6 to 8 months worth of real estate taxes and homeowners insurance. We have listed here a capital account. Capital account is certainly a great idea for you to have when you start to consider becoming a homeowner, and certainly when you are a homeowner. It's not required. Capital account is something my family uses for those times when things come up in the home that are either unexpected or are planned for. So for example, I recently moved and we bought a new primary residence, and we've been homeowners for the last 15, 16 years in our prior residence. So I've been doing the capital account thing for basically 16, 17 years. And I find it very useful to have in a new home, because what you'll find is once you move into a property that you've never lived in before, you're going to start to see some other things that you're going to need additional money for. Could be, you happen to run your air conditioner a lot, so maybe you're going to use that capital account for more utilities or difference in the utility bill than you anticipated. Or in my case, everybody wants their room painted a different color. So I'm buying lots of paint, have to hire a painter, things like that. Bonnie, in your experience in working with your clients, I'm sure you do a lot of follow-up with them. What are some of the things that your clients likely use, have to pay for when they immediately move into a property? Give some examples.
Right, well, primarily the personalizing it, like you were talking about, and making things their own. And then, of course, if there's any other maintenance and repairs to the property that are needed, then they want to address them too.
Good. And the way that we suggest, through the credit union, in order for you to develop, number one, how much you can put in that capital account and how much you're going to need, is we want you to put together, a budget and really kind of walk through, hey, here's how much we can save each month after our housing expenses, so that we can have an account set up for unknowns. It's really for unknowns. But again, it can be for knowns. Maybe you're planning to do some things, but I find it gives me peace and confidence for the unknowns. So capital account is certainly something you want to think about before you get in the property. Myth number 3: if I change jobs, I won't qualify for a mortgage. So I can understand where this comes from. But certainly, in my experience in working directly with members, directly with borrowers, it comes up because when you start to work with a mortgage loan officer, you're going to start to tell them a lot of things that a lot of your close friends don't notice. Things like, hey, I'm not so happy with where I am right now, or I'm looking to kind of switch, careers or industries, or I'm looking for more money or less stress, or both, things like that. You can absolutely continue to qualify for a mortgage if you change jobs. The caveat would be, if you do change jobs, you want to communicate that to your lender as quickly as possible. And this is what the advice I gave my neighbor on Sunday night. He's actually changing jobs from, he manages an office for Uber Eats, and he's actually changing to the Pro Golfers Association, the PGA. And his concern was, is this gonna impede me from buying the house around the corner? I said, no, but you want to have a conversation with your loan officer so that your loan officer is able to look at certain things that are measurements within the application process, specifically your debt to income ratio, which is basically a measure of your income versus your expenses. And so that's where you want to make sure that you have that open line of communication with your lender, because you may have to make some adjustments either to your loan amount, or you may not have to make any adjustments. But it's something that where yes, you can switch jobs, but you want to be cognizant of your income, and make your lender aware of that so they can make any necessary adjustment if there needs to be one. Bonnie, I'm sure in your years in working with clients, you've had people switch jobs. So if you could elaborate on instances where that's
absolutely common. I mean, anybody who's conscientious in their life, they want to move up and better themselves. So in most cases, they do stay in their own field, depending on their educational level.
Yeah, I mean, it's okay to change jobs, but it is definitely critical that if you do that you communicate that as early as possible, simply because you want to make sure that the lender has enough time to make any adjustments if they're necessary. So communicate that. Good thing to mention here is which is in line with this myth, is if you are changing anything in your financial picture during the loan process, similar to communicating, a job change, you want to communicate that to your lender so that if they're aware of it and can make any adjustments that may or may not be necessary as early as possible.
Yeah, I always tell everybody, don't buy a car, don't buy any furniture, don't buy anything until you get your mortgage and move in your house.
Yeah, I mean, we encourage everybody to buy a Ferrari, just do it after selling it. So, certainly just be aware of that and communicate it as early as possible. This one's a good one. You can't use a grant or loan or gift for your down payment. That is, let's see, that's absolutely not true. You can use grants, you can use gifts, you can use, both of those things for your down payment. It's absolutely common. I would suggest if you're, eligible for a grant, use it. Many times those grants don't have to be paid back. Gifts, certainly, same thing. Many times those don't have to be paid back. So, things like that are absolutely common. You can use those. If someone offered me, a gift for down payment, I would say, thank you. Yes, you can use it. I don't know of an instance where we haven't been able to use a grant program. Now, with that said, there are certain requirements for each individual grant program, and they vary by the grant program. So, for example, a lot of grant programs have little riders attached to them, like you can make too much money in a certain area, things like that, or you can have not enough people in your household in order to obtain the grant and things like that.
Or not really loans.
Right, or loans, things like that. So yes,
Can't be defaulted on your student loans.
You want to make your lender aware that you're thinking about using those as early on as possible. The lender wants you to get the loan. They want you to get the loan. And the best way that they can work for you and with you is to have as much information upfront as possible. You don't want to, last minute say, hey, I'm using a grant. You may have to go back into underwriting, and that could cause a delay. So you want to be as upfront as possible with your lender with anything that's going to materially impact your loan application. And that I would say that grant or gift it definitely falls into that category. Job change, things like that. Again, communication is a two-way street, so you want to make sure that you communicate those things to your lender as early on as possible.
A lot of people get a gift from their family members and on the first-time buyers, and sometimes second. So that's a very common thing, and that's a wonderful thing too, because it really helps out a lot.
happens all the time. Again, if
Yep.
you can't use the gift, I will leave my cell phone number at the end of this. You can text me. I'll pick the gift up for you. But you know, there's definitely a lot of opportunities to use gifts and grants. Number 5 here. This is I always find this one interesting. Kind of plays into the number 3. Only cost associated with home ownership is the monthly mortgage payment. Bonnie, is that true?
We know that's not true.
That is absolutely not true. And so the way I would address that is when you become a first-time home buyer, it's often, and Bonnie, you can probably speak to this better than I can, but it's often one of your most expensive years in the house. So your first year in the house, simply because you want to make it yours, you want to put your stamp on it, and things like that. But
Right.
I will
It's
tell
an
you,
adjustment if you
it's
were
an adjustment.
renting before.
But
You know,
you're,
but I mean, really, it's no different than when you went from your parents to a rental. That was an adjustment too. So, and you know, you gain some independence. So
great
you
analogy.
wanna take another step in the independent road.
Right, great analogy. But the end goal or end reward is worth some of the initial pain. Meaning that yes, it can be a little more expensive to get the house the way you want it initially, but the reward there is over time. This is one of the best ways in order for you to build wealth and stability for your family and for yourself. And so, though there are times where you'll say, "Man, this can be a challenge." I don't really know a whole lot of things in life where if I didn't have a challenge, it was worthwhile. And
Right.
home ownership, it's true. Home ownership definitely falls into that category. But the real way to kind of prepare yourself for this and put yourself in a position to be not only a successful homeowner but a successful person, and to really kind of mitigate some of the things that happen initially is to write down and create a budget and a budget that you can live by. Right? I'm not talking about a budget where you say, "Hey, I'm not going to spend any money whatsoever." That's not realistic. You're going to be broken from the beginning. But a budget where you can do the things to your house that you want to do, but continue to live the life that you want to live and be able to do things that allow you to share that life, so that you're able to not only to be a successful homeowner, but be a successful person. So creating a budget and creating that capital account, when you do that, it's going to empower. It'll empower yourself to say, "Hey, you know what? This is the right decision now." Or it can also empower you to say, "It's going to be the right decision for me in 3, 6 months, 9 months from now." That's okay too. We want you to be a successful homeowner on your timeline, and we're going to help you do that by giving you this information. But really, the information is only as good as you allow it to be, right? So if we talk tonight and say, "Hey, do a budget, and you hop off the screen here and go back to your daily life and just say, "Hey, that was really cool. They said do a budget," and you never do one, well, all that information is lost on you.
That's really good, Patrick, that you always tell people about the budget, because all the financial planners will tell you that buying a home is your single most important and best investment in your life. So the sooner you can start that process, the better.
And well, yeah, and let's think about
it. It's inherent that you then start trying to manage your finances better.
Think about it. I mean, we've been doing this a while, Bonnie, and I got 20 years in, you got 20 years in. The reality is that if you prepare, for being a homeowner, you feel a lot better about yourself.
For sure.
Right? And if you don't, what I've seen in 20 years of doing this, the people that I've spoken with that have wanted to buy a home, that don't take the necessary steps to make preparations and don't educate themselves and believe maybe number 5 is true. Number 1, often they never even make it past the initial stages of saying, "Hey, I want to be a homeowner." They never do. It happens all the time. Or they get in, become a homeowner, and then they regret it because they didn't think about the budget or the capital account or things like that. And what that ultimately does is that creates worry. And have you ever heard somebody say, "You know what? I need some more worry in my life"? I mean, that's, people just don't say that, right? So, I need more peace, I need more stability, I need more confidence. Do a budget. It will give you all those things.
Right.
Awesome. Went back. Number 6, best loan to take is a 30-year fixed loan. So I'm going to go two directions on this. So in the past, I'll tell you my personal situation. I've owned up to 15 properties at one time. I own 3 today. I would have said to you to always consider taking an ARM. Would have been my advice, and I would have been correct in that advice, because it would have, and I would have gone over how to use that ARM as a financial tool, and you would have loved me for it. However, today is April 14th, 2021, and we are still in a period where the fixed rate loans are actually below adjustable rate loans. So my advice to you today on 4/14/21 is to only go with a fixed rate product, simply because those rates are so low, and in fact, they are lower than any adjustable rate mortgage you have access to on the market today.
And you know what? And I would like to say that they're the lower, Patrick, than we've seen in like 25 years or
I
more.
would have said to you a year ago, before everything started, that there was no chance that interest rates could have gone any lower. And then I would have gone back to that video and played it today and said, that guy was wrong because of pandemic. So, hey, you know, that's what happens sometimes. So today, I will advise you to take a fixed rate loan, but I will ask you to consider certain things with that fixed rate loan. So one of the things I'll ask you to consider is how you want to use that loan as a financial tool. So you can still use your loan as a tool, even if it is an adjustable rate mortgage. Here's how you can do it. What I want you to do is consider who you are as a person. I don't know you, we're sharing a screen together, but you know who you are. I can look you in the camera right now and tell you that, you know, as true as it was, 5 years ago, it's still true today. I have a personal shoe problem. I buy a lot of shoes. And as a homeowner, look, it's true. I have pink shoes on right now. I love them. As a homeowner, that affects how much I have to put in a capital account or to use toward my house. That has not changed at all my entire life, whether I was a homeowner or not. It's just who I am. You need to look down deep at yourself and say, who am I as a person? Do I like to spend money? Do I like to save money? You know who you are. And by the way, I love both of you. I have friends that are spenders. I have friends that are savers. I'm kind of in the middle, except for shoes. So the reason I'm telling you that is you can still choose a product, a loan, a program, and still live life and use that program as a tool and keep other things in your life as you want them. So if we're talking about a 30-year fixed loan, I want you to consider, okay, how long do I want to be in the property in reality? Because maybe you want to be there 30 years. Average life of loan is still 5 to 7 years, somewhere there, so 6 years. How fast do you want to pay the loan off? Do you want to pay it off in 20 years? Do you want to pay it off in 15 years? Do you want to just take your time and pay it off in 30? So things to consider are, do I want to make do I want to make additional monthly mortgage payments to pay my loan down faster and pay less interest over time? Maybe you do, maybe you don't. I would suggest in your first year of home ownership that you simply pay monthly mortgage payments as they're scheduled, and anything additional that you have, extra income you put to beef up your capital account. That would be my initial strategy. Then in year 2, after I have a year of living in the house and I know how much I'm spending on utilities, I know how much I may need for like a new heater, a new air conditioner, or how much paint I need, things like that. Then I would start to employ a strategy of, okay, if I want to pay my loan down a little faster, how do I do that? Well, I can take an amortization schedule, which APCO is fully ready to prepare for you. And I can then look at that amortization schedule and say, if I take an extra $300 per payment period, and apply that toward principal only, what will that do to the life of my loan? Well, I can tell you right now, it's going to reduce the amount of payments that you have over the course of that loan. And so that will allow you to pay down your principal faster, which in turn allows you to pay less principal over time. And so that's how I want you to start consider what type of loan you want to do. I want you to choose a fixed rate loan, but you may choose one that's say a 30-year, 25, 20, 15, or 10.
Yeah, once you meet that loan officer, they're going to really guide you in the proper direction. Once you give them all your information, it won't be a difficult choice at all, which program to choose.
Absolutely. Know who you are as a you know, a spender, and it's going to lead you down the path to the right program. Number 7, you don't need a real estate agent.
Oh, boy.
Bonnie, you want to tackle this?
Sure. I know how real estate is evolving and changing. We had a meeting about Zillow today, as a matter of fact. But you know, it's just like cars. Yeah, you could buy a car online, but I wouldn't buy it without seeing it. And you know, I'm sure that people are going to want to see a house 100 times more important to see the house in person, not just virtually. As you know, Patrick, right? Because you need to see the systems. You need to see the plumbing, heating, electrical, roof, flashing, and structure. And you need an inspector as well. Besides, the appraiser is not an inspector. The appraiser is just there for a value from the bank, but you need a home inspector. And a good realtor knows how to troubleshoot the things that come up and how to solve all the problems. So
Absolutely.
whatever they come up with, I've heard it already.
Well, I can speak from very recent personal experience. My family recently relocated from Pennsylvania to Florida, and I had the you know, the good fortune of being involved with 2 phenomenal real estate agents, one on the sell side and one on the buy side. So I want to give a personal testimony of how in each of those instances, or the relationship of the real estate agent was critical to my family. So on the sell side, the real estate agent that I used was a personal friend that I've known for 40 years. And I chose her specifically because I knew that she would speak with me the way I needed to be spoken with at that time in my life, which was she literally came into my house that I've owned for the last 15 years, and she totally redesigned how we lived in the house. Actually, I said to my wife, I'm like, we should have brought her in years ago, because what she did in the house just makes the house look so much better, so much more useful. Maybe we wouldn't be moving, right? So she came in and sat down with my wife and I, and she put together a plan to make the house the most appealing to the most amount of people. Got record number for the house, 8 offers in an hour, did a phenomenal job. We would not have done that without her, because we lived in the house and we thought it was perfect. Bonnie, how many people have you encountered like me that think their house is perfect?
Well, yeah, because you're thinking from a completely different perspective. You're thinking about how it works for you,
Right.
and that may not be the best for most, you know.
And it was not. So I can tell you that our agent literally came in and broadened the market for us like that. We
a lot. That
Right.
means a lot. That right there was money in your pocket.
Money in our pocket, because it is very difficult for the homeowner to separate themselves from that house, because every homeowner, just like me, I'll put myself in that category, I thought I had it perfect. But the reality is you need someone like a real estate agent to be able to come in and show you how to sell that house.
Right now, in that particular instance, of course, you were the seller. And on the buyer side, the best part is you don't have to pay us. The seller pays us, you know, and we still send you homes that meet your criteria. We help you know when there's a new house out there that does meet your criteria, take you to go see it. And one of the most valuable things is help you with your offer, because that's a very high skill level that people do not have unless they've done this for a long time.
Absolutely. And on the buy side, my testimonial would be that the real estate agent that we use in Florida, who has become a great friend of ours, she literally took an entire week showing us houses every single day. We looked at probably 40 to 50 houses. And I grew frustrated. I can tell you that right now. I grew frustrated because, I wanted, how everybody is today. Everybody wants to get it out.
Well, you're a results guy. You want to get it done.
Wanted it done. So that Thursday night before we made our offer on a Friday, I was convinced that the house we had last looked at that day, that was the house. And in fact, it was substantially more than the house we bought. And I said to Colleen, I'm like, all right, what are we going at? What's the offer? I want to get this done. I am done with the process. And when you look at 40 houses, you know, they all start to look the same. So I'm done with the process. And to her credit, she said, and she couldn't close the deal right there. I can tell you right now, I was a buyer. It was done. It was done on my mind. I was ready to go. To her credit, she said, but it doesn't meet X, Y, and Z on your list, right? Which it didn't, right? She put together needs and
That's
wants.
an honest question. Okay, so that's a very good realtor.
It was awesome.
And most realtors have your best interest at heart.
That is
You know, I
absolutely
don't care
correct.
what field you're in, you know, mortgages or car mechanic or whatever. Some people have your best interest at heart and some don't, but the majority of realtors do have your best interest at heart, and the lenders.
And she did.
Particularly the real estate agents, because, you know, they usually keep a relationship with you after the fact.
Oh,
So
I
they
referred
wanna
5
make-
people to her.
Right, and you want to make sure they're happy. And,
Yeah.
you know, so it's very important to know what to offer. And we're in the most unusual market that I've seen in 32 years. So you definitely need the help and guidance of a good realtor in this market.
Yeah, and it was my family is so thankful, because that next day, you know, we found the house that had those 3 things that were missing. And
Perfect.
I'm actually sitting in it now. So
Yeah.
use a real estate agent. Well, I want you to use Bonnie in this case in New Jersey, because she's going to help you out. I've done, you know, many seminars with her. And if I had a friend buying a house or a family member buying a house in New Jersey, I would be texting Bonnie, hey,
Thank
I want you to work with this person.
Appreciate that.
Good. Myth number 8. This is I can absolutely understand how this is confusing for people. So give you a little background here. When you ultimately have a house under contract, the lender is going to require what's called an appraiser to go out and do an appraisal. And what that does for the lender is it establishes the value of the property, the 3 like properties of similar distance, size, and structure to each other, right, to the house you're buying. That is really for the use of the lender to establish the value of the collateral, the house you're buying.
And make the loan.
To make the loan. The inspection is really for your use. It's for the homeowner's use, the borrower's use. And what the inspection does is that it tells you the condition of what you're buying. It tells you how old things are. It tells you, you know, if something's going to likely need to be replaced, or it really kind of tells you the condition of the structure of the property and whether or not you're going to have to spend additional money and when. So those often get confused, and I've definitely encountered more than once in 20 years, people saying, well, I don't need an inspection. I have an appraisal.
That's a common problem.
Right. You want to get an inspection done because you're spending a lot of money. You want to know
Absolutely. It's
what you're getting for that
indispensable.
money.
Because
Bonnie,
none of
can-
us are appraisers and none of us are inspectors.
Good.
We
Bonnie,
must
can
have
you
that.
talk about some times where you've had a client get an inspection done and it's come back with some problems? What typically
Oh my
happens?
gosh, are you kidding me? I had a buyer who was a second-time buyer, and so he'd maintained his house beautifully. So he really thought he didn't need a home inspection the second time around. He's like, oh, I can see what's going on here and there. Okay, so I said, please, I'm begging you, get a home inspector. Well, he got a home inspector, and guess what? We found asbestos in the ductwork in the slab. There's no way he could have seen it. You see what I
Yeah.
mean?
Home inspection is very valuable for you to know what it is you're actually buying. So though
Right.
it is an additional cost in the process, which could be several $100s, likely to be, $300 to $400,
Or
You-
thousands.
or
Chimney
thousands,
liner
right?
can be thousands.
Right.
A roof
it-
can be thousands.
It's a small fee to gain a large, large benefit in the form of peace of mind
Absolutely.
when you're doing, potentially several $100,000 transaction. So
Yep.
my recommendation would be to get an inspection done.
Always, always. Even I get one.
Number 9, don't settle for less than a dream home. Bonnie, you want to tackle this one?
Well, we might have to adjust these things a little bit depending on your budget. But certainly we usually get the most of what you would like to try to aim for. And, you will make your own decisions. Nobody's going to force anything on you. You will be given all the choices. You're an intelligent person and you can make your choices. Our job is to give you all the facts and information so that you can make an intelligent decision.
Absolutely. And one of the best ways, and again, personal experience, recent experience of relocation, is that needs and wants list. Bonnie, could you give us a few examples of how you
Yes.
work with a client to do that?
Well, I've started out with first-time buyers that maybe had, 3 children. And so and at first they wanted a garage too, but then they couldn't get enough house. They could only get maybe 3 bedrooms, and they wanted each child to have their own bedroom, and then the parents have theirs. So of course they modified that, and then they went with that so they could get more house. But we do have a couple questions. Should we address those?
Sure. Let me have one
as
more
far as-
slide here, and then why don't we take our questions then, if that's okay?
Okay.
Good. So last myth we have to address tonight is, this is interesting. Now is a bad time to buy. Bonnie, what do you think about that?
It's never a bad time to buy, particularly because the interest rates are lower than I've ever seen. However, it's challenging because there's not a lot of inventory, but that's why you need a good agent to help you with that.
Absolutely. And again, I would absolutely throw the concept out of bad or good time to buy. The time to buy is often going to be driven by a lot of circumstances. And you can really kind of mitigate the trepidation to buying by empowering yourself, right, with information. One of the best sources of information, I'm going to say it again, is from you. And that's when you sit down and write down, what your goals are, determine what you can afford, what you can save, and really that's going to help you determine your timeline better than, any advice that I can personally give you or Bonnie can give you. So that's kind of, I would rely on, okay, is this the right financial time in my life to do this? Am I able to save money? Am I able to create that capital account? That's kind of how I would approach that.
Right. And also, if you stay in a house through more than one market, the real estate historically always goes up and down. So anybody who I've ever seen stay in a house for a fair amount of time always makes money on it. And then let's not forget, every month you're paying your mortgage, so your balance is going down.
Well,
so you're winning in 2 different ways.
I'm going to quote my father. The reality is you got to live somewhere. So you're either paying rent or you're paying a mortgage.
Well, and I tell them you're either paying somebody else's mortgage or your own.
It's true. So, I mean, when you put it in those terms, it's like.
You had rental property, so you know what I'm talking about.
And I appreciate all my tenants. So, yeah. All right, we have some questions here.
Okay, so regarding the home inspectors,
yes.
I have resources for those. I can help you with that.
Perfect. So Bonnie would be able to recommend a home inspector. Good.
Okay, now Kara is asking, is it more difficult and expensive to have a home built compared to being approved and purchasing existing? Yes, it definitely is more costly at this time to build a home. I would say it's in the neighborhood of 20 to 30% more.
Well,
I've been pricing them recently, actually.
It's really interesting because the price of materials has tripled. Yeah.
The lumber went from like $15 a sheet to $60.
Yeah, I mean, 2x4s used to be $3, and I think they're $8 or $9 right now. So, to answer your question,
our wood is being exported to Europe.
Yeah, so
and then of course with the COVID problems with delivery, so everything has impacted on the building industry.
You need time to
right
build.
Now you're going to build in some equity if you buy a resale.
Correct. Does APCO assist with home purchase in other states outside of New Jersey? Yes, APCO is a federal credit union. They can they can lend in the majority of states. of resources of home inspectors, which you can give. I'm sure if, okay, Bonnie, that was you. Barbara Hoffman, the 20% down payment concerning having to purchase mortgage insurance. So they are linked, Barbara Hoffman, they are linked. So when you put 20% down on a home, typically you will not be required to have private mortgage insurance. And just for everyone's knowledge, private mortgage insurance is insurance that the homeowner pays for monthly in the form of an additional fee, but it's insurance that actually benefits the lender. Now you might say, "Ooh, that's not so great." Well, it's great in the sense that it allows the lender to make loans with less than 20% down. Now, there are instances where you put 20% down and you could have private mortgage insurance. An example of that would be if you put 20% down and did an FHA loan, you would still have mortgage insurance. There are instances where you can put less than 20% down and also not have private mortgage insurance. Examples of that would be loans where they're broken into two loans. Maybe there's an 80% first loan and a 10% second. And that's an instance. There's instances where you could do 95% financing, meaning put 5% down, and the lender waives private mortgage insurance, or it's built into the loan. Again, your loan officer will be able to answer those more specific questions that are going to be instances where they're unique to your individual application. But that 20% number is linked to that. Good point. Is it impossible to be, number one, I'm going to read the rest of the question. It's not impossible to do anything. It's just a matter of timing or structure. Is it impossible to be approved for a mortgage with a bankruptcy? Yes. Different loan programs will have different waiting period or time intervals in between when a member or borrower has had a bankruptcy and the time they can get a new loan. Typically, what the lender is looking for in any of those instances is the establishment of new current credit. Additionally, they want to see on that credit that there haven't been any tendencies toward not paying on time. But it is absolutely possible to get a mortgage if you've had a prior bankruptcy.
Yeah, there's a waiting period. You can't actually be approved while you're in the bankruptcy process, but after the waiting period that's required for the type of loan you're looking for, yes, you can. I've seen it many times.
Not impossible. Just could be a matter of timing or structure. Good. So those are our myths that we covered tonight. As an ad here, we have some things that we want you to consider to do as you start to think about making application. And again, these are good things to consider as you start to think about your budget process. Obviously, we want you to know about your credit. We're going to pull a mortgage credit report or use a mortgage credit report in the process to be able to evaluate your loan application. I would encourage everybody, no matter your score, to make application when ready, because your credit union has the ability and willingness to go outside the box to make mortgage loans. Again, APCO gives you a huge advantage in the mortgage world. In fact, I've worked very closely with both Barbara Agan, the organizer tonight, and with CEO Jill Peterson on some pretty unique programs at APCO. And it's actually one of the funnest credit unions that I get to work with, because they take their program seriously. And that's a big difference in the credit union world. I mean, you're at a credit union that takes their first mortgage program very seriously. So that's what that translates to you, the member, is that they're gonna do some pretty cool things for you. There are things that are,
right,
that are outside the box.
And as Patrick was saying earlier, they keep their mortgages. So I don't know if you realize what this really means, but it really means that they can make, decisions that will benefit you that another mortgage company could not make. So that's another advantage of being at APCO.
So question here, a suggestion on affordability calculator. Barbara, are there calculators on the APCO website?
There are calculators, but I'm not really so sure that they would be considered affordability, but it's interesting that that question came up because our next virtual session that we're holding on May 12th is Budgeting 101, where we kind of take a look at income, expenses, and I think that is a great conversation to put that budget together. And that's really the only way you're going to know what you can afford. Because again, you know, you might have to allow extra money if you're, you know, hooked on sneakers like Patrick, you know, with the ladies that get the nails done all the time. You've got to make choices about what's important, what's necessary, and what your goals are. And that's all going to be covered in the next session.
Robert, I've been asked that question kind of in a different way. People would often come up when the presentation's done in person, they'll say, well, you know, how do I know what I can afford? That's a question a lot of people have. I don't have a standard answer other than how I would answer that. And that is, I know how I live my lifestyle. And I know that if I had a payment that every night before I went to bed, I had to think about, I know my payment's too high. I know it's a weird way to look at it, but I want to kind of get to a payment that I know that I can live my current lifestyle with and not have to stress about. So that, you know, when you start to do your budget and kind of play with some numbers, because that's really a personal thing to do, we can certainly help you with that. That's how you kind of start to arrive at that number. Because in the mortgage world, I can tell you, we can give you a number and say it's, you know, you want to be below 43% of your overall expenses. The problem I have with the mortgage industry, I'm in it 20 years, is that we're basing that number off of gross income, not net, right? So immediately I know you're paying taxes, so that number is immediately off by at least, you know, 20%. Couple that with the fact that I know you have a cell phone, and then I have a cell phone. I know what that bill is every month. I know you probably have car insurance. I have car insurance. I know what that bill is every month. I know that you spend money on utilities. So you have to be able to sit down, write that down, and take those things into account, and not listen to, you know, if you went to a standard mortgage lender, they're going to say, oh, Robert, stay below 43%. That's their answer. I'm telling you, I know it is. That answer is not good enough. So you want to take into account those other factors, and that's how you arrive at how much you can afford. Because the answer, if I gave you 43% debt to income ratio, that's really answering the question, how do I get qualified to stay below 43%? So that's how I would kind of approach that question.
And then someone is asking about sitting down with a real estate agent to get a financial idea of the process with their income and credit scores. Well, that would actually be the loan officer at APCO, and they would give you that proper guidance that you would need on that.
Yeah, and to kind of further that, the earlier, you might not be ready to buy now. That's the reality. And I can tell you, you know, if the 100 applications come in, 33 of them immediately are not ready to move forward. That's the reality of applications or inquiries to applications. And that's been true for 20 years, and it'll be true in 20 years. It's just the nature of the process. But my answer to the same group of 100 people would be still make application, even if you're not moving forward today, because it's going to give you that some pretty critical information, and you might find some things out that maybe you hadn't considered in the budget process. So I'd make that application as early as possible. It should be the loan officer. Okay, great. Yep, got the email. You'll be hearing from me. All right, awesome. Great. Do we have any additional questions you feel comfortable asking in front of the group? You know, certainly type them in now. If you know, if you have any personal questions that you don't want to ask in front of the group, absolutely understood. Our contact information will be sent to you. My cell phone's on there. Bonnie's cell phone's on there. Feel free to text me. You can call me.
Absolutely.
If you need help with a budget. I've done this multiple times in the past, typically 2 or 3 times after each seminar. I'll get a text or an email or phone call. I'll very quickly share my screen with you in a GoToMeeting. throw an Excel spreadsheet up and do a budget with you in 5 minutes, and you'll feel a lot better about yourself. I've done that multiple
We're always
times.
happy to help. We're always happy to help.
Good,
Absolutely.
good. Awesome. Listen, Bonnie, thank you so much for
Thank
tonight.
you,
Barbara,
Pat.
thank you
I
for
really
putting this on.
appreciate it.
Thank you, Patrick, and thank you, Bonnie. And
You're
just
welcome. Thanks,
thank
Barbara.
you to everybody who took the time to watch the program. I will send out an email, most likely on Friday. I will include the recorded session here, as well as the materials and Bonnie and Patrick's contact information. And, there's a lot of people who are just getting ready to start thinking about buying a house now that attended our sessions, earlier or late fall of last year or earlier this year. So it is a process. So don't feel like, okay, I'm here and I need to, I need to be ready today. I know a lot of people signed up for the education. Whatever stage that you're in the home buying process, we're here to help.
It's all good.
Last
The good news
words.
is that you attended tonight and you gained valuable information that will really help you in the future.
Yeah, definitely take from tonight as well. Don't get overwhelmed in the process. Don't be pressured by anybody, and by anybody, I mean even yourself. Take your time in the process, evaluate where you are, and then move on your timeline. You're going to have to make some adjustments to your budget as you go. It's the nature of the beast. So be prepared for that, and be honest with yourself as you make those preparations.
All right, great. Thank you.
Awesome. All right, thank you so much.
Thanks, everybody.
Take care.
Thanks, Patrick. Thanks, Barbara. Have a good night.
You too. Bye-bye.
Bye.